We have now looked at an example of business strategy. Now let us move ahead and look at few models and frameworks in finance. Before we start the financial models and frameworks, we must know few key terms which are widely used in the world of finance. Let us understand these words with example. The first one is revenue. If a company that sells watches sold watches and received rupees 10,000 for selling them in the year 2020, then the revenue for that year is rupees 10,000. So we can say revenue is the total value of the goods or services that has been sold. The next one is cost. If that watch company has bought the watches for rupees 3,000 and it has hired an employee, a salesperson whose salary was 1,500, then the amount that the company has spent to sell the watches was rupees 3,000, which was the cost of the goods, and 1,500, which was the salary. So the total cost is 4,500. The next is EBITDA, which is earning before interest, tax, depreciation and amortization. So EBITDA is the difference of the revenue and cost. In our example, revenue was 10,000 rupees and the cost was 4,500 rupees, and hence the EBITDA was 5,500 rupees. Now, the company had also taken a loan for which the company had to pay interest to the bank, which was worth 500 rupees. And the company, since it has earned something, it had to pay tax to the government. Let's assume it was of rupees 1,000. Hence, the profit is whatever is the EBITDA value minus the interest which is paid minus the tax which was paid to the government. So it is 5,500 minus 500 minus 1,000 rupees, which is equal to 4,000 rupees. So we can say profit is the revenue, total revenue minus the cost minus other expenses like interest paid to the bank and tax paid to the government. Whatever is the profit which is earned, it is either reinvested in the company or it is shared with the business owners whom we call as shareholder. Imagine there are two owners. One is owning 10% of the business and the other person is owning 90% of the business. Now, the 4,000 rupees profit will be divided among both of them. The first shareholder will receive 10% of the 4,000 rupees, which is rupees 400. And the second shareholder will receive 90% of that profit, which is rupees 3,600. Now that we know the basic terms used in the finance world, let us move ahead and look at some of the most important frameworks and models in the field of finance.